who's going to buy their T-bills if they do that, right? The US government requires buyers of their debt. And the fastest growing buyer of debt is Tether right now. In fact, if Bitcoin price goes over the next 10 years to $1 million, the T-bill buying, the short-dated T-bill buying is more than enough to replace China, who have stopped buying the T-bills. So the US government debt is reliant on stable coins growing. So I don't think they're going to freeze that, because that's kind of committing suicide on their debt. They could do it, but that would be an absolute crisis, a fall of a nation state. That could happen.
Yeah.
But, that, if that happens, the nation state's going down. Yeah. That could happen.
All views expressed by the host or guests are solely their own opinions. Nothing stated in this podcast should be considered a specific endorsement to make any particular investment or follow any specific strategy.
Willy, welcome back to All in Bitcoin in beautiful Florence. Part 1 was just the beginning, so here we are, part 2. Time to go deeper into you, Woonomics, and Bitcoin. Are you ready?
Yes, I am.
Okay.
Welcome to Florence.
So, born in Hong Kong to Chinese parents, raised in New Zealand, nomad for many, many years. Who are you?
Yeah, I think when you're born into one culture and raised in another, you get a perspective. Obviously, I mean, back when I was a kid, growing up in New Zealand, there was a lot of racism. Actually, there was a lot of hangover from World War II, because the grandfathers would say we would fight the Japanese and da-da-da-da. And so I think there was definitely it wasn't a very friendly upbringing. You didn't feel welcome, I think, is the thing. And so maybe that made me somewhat of a rebel. If you look at my later life, I spent many years traveling the world, and I think when you're born in one place and you're multi-generational in that place, you feel like this is your place to be. You have these deep, deep roots. And I know for myself, I don't feel that. I mean, when I go to New Zealand, I feel like that's my place. But I don't have the multi-generational aspect, which some of my friends do. And you can see just how deep those roots are, whereas I am really happy to live in different places. And potentially even stay and let go of wherever I was born. It's not really a big thing for me. And so I think that shaped me a lot. Mm. And if I look at my path through traveling to different countries, I call it me reminders, right? When you're in one place all the time, you're always reminded of me, who you are. And it's you might even say the classic cliche is when adults go back to their parents' house, they're treated like 15-year-old or 12-year-old kid, even though they might be 30 or whatever. And it's really hard to break that mold, because you go into this unconscious habits of this behavior. And so when you're in this new environment, I think you can reinvent yourself a lot. And I think that happened with me as well. And my trajectory after I left New Zealand was to start businesses. And I think it's easy to do that because you see opportunity, you see new things. There's no hang-ups on the past, what you can and cannot do. Well, these are probably self-imposed. So, yeah, I think that was the outcome of it. Being okay to travel, be anywhere, see new environments, and not have sort of a hard lock on the mold that you were born into. Yeah.
Do you see yourself as spiritual or religious? Do you follow any religion in particular?
I think there should be 8 billion religions in the world, because I think everyone has their own path. But the practices are good, I was born into Christianity, let's say not born, but being in New Zealand, that was the thing. I went to church with my parents and so forth, and so there was that Christian side. When I was burnt out running a startup that was doing, it was growing very quickly, but it was a very tough burnout for me. I needed to find some sort of grounding, I think, and I did a Vipassana meditation, which is a Buddhist. I did a yogic practice, a breath practice that was probably Hindu roots, you'd say. And so I found that all of them are grounded on something that's very, very beneficial. And I think the secret is to look at where the common ground is and how it all works, because it should make sense. And I think everyone's path is also very specific to them and on what works. So that's what my view of it. I wouldn't say I'm Christian. I wouldn't say I'm Buddhist. I wouldn't say I'm Hindu.
What do you think is the common ground among all of them?
That's
something bigger than us.
Yeah, I would say that. I could say it in a very cliche way is that they all point to love. They're like all paths lead to love. Mm-hmm. And you might say that's something bigger than us, and maybe you could say, well, there's no real separation between all of us. And so I think that they all point that way, and they're just different ways of expressing it. And the thing is, you can get into these conflicts over, this path is the right path and that is the right path. And you get, into wars over it.
How important do you think is to grow strong local Bitcoin communities?
Bitcoin, where it is today, is from local community. And it was everything in the early days. And even today, it moves the world. If you look at, say, the Bitcoin Beach Initiative, that was community run and that spread out and it changed that country. Ultimately, it got to the president, and now you've got the First Nation state that really, truly made policies to adopt it. And, the president's a Bitcoiner.
What role do you see yourself playing in it?
Yeah, up till now, my role has been to advocate for it. And so before COVID, I would go to meetups. Now, I've always made a point of going to meetups to be part of the communities. Still do, right? I'm not a community builder, I really enjoy the community. I think I like to visit, and being alongside and supporting that is good. In terms of my role with community, that's a different story.
What's your greatest professional creation?
How would you measure that, CK? That's to be judged from sometime in the future, I think. My first startup was to put mobile email on the first generation of smartphones, and I thought that was pretty cool in the day. That was 2002, 2003. I thought that was great. And, moving into Bitcoin, I've always been drawn to the next thing, what the future-facing things, and what excites me are the early stuff, right? So I was really into 8-bit computers when they were coming out, because you plug them into TVs and they were like magical little things, right, back in that era. And the mobile was back then really rough and not ready for prime time, but that in itself was very exciting to me. And when I saw Bitcoin, it was the same thing. It was so rough and not ready for prime time, and it was interesting. And so my contribution in Bitcoin has been really to nut out the on-chain analysis, and wrap models around that, and be the first to sort of create market models around all this data coming off the blockchain. Obviously that's now turned into running a series of hedge funds, but I don't think of the hedge funds as the great thing. I think the great discoveries was contributing to the knowledge of analysis on the blockchain. I think that's probably more important than the mobile stuff, because mobile's gone way ahead, right? And I think the on-chain analysis is always going to be foundational to reading the markets within Bitcoin and altcoins.
Okay, so that's it. With everything you do, investing, running funds, publishing, advising, analyzing markets, What does an ordinary day look like for you? Could you walk me through it?
Yeah, I don't really have many ordinary days in terms of a strict routine because right now, for example, the whole family's traveling around the world. And other times we might be in a base and I'll wake up and then wake up the kids, all this sort of stuff. And then actually I will then go to my computer setup. I will check the structure of the market for about 5-10 minutes. If there's any problems there, I would adjust my trades, that sort of thing. Once the family sort of got into their rhythm, I'll go in and tackle the day, right? And that could be anything because there's so many balls in the air. I could be working on the hedge funds, the next companies that we're working on, the publications. There's just a list, and that changes every single day, every single week, in different priorities. And then, jump on Zoom calls if we need to do specific IC, investment committees to run the funds. So it's different. Sometimes I'll be writing software to work on a model to analyze the market. Sometimes I might be just a lot of time in chat with different people. And so it just varies. And so that'll just go through the day. I'll take breaks, sometimes I'll take over with the kids and so forth. But there's no real routine or structure.
And you like it that way?
It's the way it is at the moment. I think I would die in a totally structured environment. I'm not a soldier. And I would like a little bit more routine, a little bit more of a base to launch from. But right now we're traveling around the world, and it's a little bit less structured.
Do you see yourself traveling for a while?
Our family loves traveling, but our next thing is to, like we're saying, establish into a good community, and the kids are getting to the point where we need to do that as well. So I feel like that's going to be a more restful place. Okay.
So you mentioned that you're running 3 funds, if I remember correctly, but you are also creating a new one.
Yeah. So I founded Crest with CMCC Global in Hong Kong 3.5 years ago, and that runs 3 funds, right? And it's a fund of funds operation. So that's relatively simple. You bring in capital investors, and we allocate, and we generate yield. We can generate yield on US dollars. We can generate yield on Bitcoin. And we have an institutional product that is in partnership with C's Banking Group in Switzerland. And so that whole process has been very, very robust. And we can build an institutional product. And that's been a really big learning for me. And so now we're in the process of creating Super Collateral Fund. That's a whole new business, and it's in partnership with DebiFi, and we're going to lend fiat US dollar to Bitcoiners whilst the Bitcoiner retains their private key. So there's no hanky-panky funny business going on with their Bitcoins, which is what we've seen in past cycles where it just moves and gets rehypothecated, never mind whether there's promises or not. This excites me because it empowers Bitcoiners to not need to sell their Bitcoin. They can borrow against them, and they have a private key, so they guarantee that those coins aren't going to move, and they get to borrow fiat, which is obviously debasing towards zero every year. And so that's the premise of it, and the fund will raise from traditional sources, like traditional investors and ultimately traditional markets.
Can retail invest? Do you need to be a business in order to borrow or lend through your fund?
If you want to borrow fiat against your Bitcoin, you can be retail. You jump on DebiFi and you can accept a loan offer, right? We are lenders, so we will offer loans at different interest rates, different maturities, different LTV ratios. Now, we will be sourcing capital from investors, right? Professional investors. They're not retail investors. They have to be higher net worth and qualified investors, or they will be institutions. So we're tapping the larger liquidity pools and then lending it to Bitcoin, which is retail, and also institutions that may want to borrow as well.
So I could borrow from you. I cannot invest.
If you're a qualified investor,
What does it mean? What do I need to be a qualified investor?
it depends on the jurisdiction, right? And so this fund, like many, are domiciled in Caymans, and I believe the minimum is 100,000 investment.
Okay.
That I think is sufficient for a qualification to be qualified. I need to double check with the legal guys, but
So
but
if I have 100,000 or Bitcoin and I want to
if you have
invest
fiat that
with
if you want fiat that you get a yield from, and obviously we're going to be getting that yield from Bitcoiners that are paying interest to the investor. That's how it works. That's for the super collateral fund, right? That's for lending against collateralized Bitcoin.
what's the deal?
Generally, it's a fee-based, a management fee, and a performance fee. We haven't established exactly what we'll charge yet, but we will lend out to the borrowers, and we take our fees, and then you get the rest. There's nuances around how do you get a higher return by lending, yet to be seen. There's ways in which we can get a higher yield, and so in this fund, we're going to give you yield on cash. So we're tapping traditional investors who are used to getting maybe 10% by investing in stocks, and we might be able to get them the same.
And it would be interesting for me to lend you my cash during the bear market
That's correct.
and to borrow against my Bitcoin in the bull market.
It depends. I mean, everyone has their different thesis or whatever you call it on how they manage their money, right? And so for someone like yourself, where you've just mentioned you might want to like be in Bitcoin during the bull market and then you want to be in cash, and then you may invest into the fund, right? If you're a qualified investor, and we would lend it out, get a yield, and then when you want to like redeem your capital, your cash, and buy Bitcoin at the bottom of the bear market, ideally, then sure, that would work. But, there's also hodlers out there, right, that never intend on selling. Maybe they're going to be taxed with capital gains if they sell. So they're never going to sell the assets. That's the other path. Like, you just hold your Bitcoins till it goes to infinity, whatever. You're never going to sell. You're going to give it to your kids. Like, you're never selling. And you're going to just use it as collateral to borrow fiat. And fiat's going to get cheaper and cheaper and cheaper. So that's another valid strategy. So if they want to borrow fiat, we will take Bitcoin as collateral. Up till now, borrowing, you'd need to front your house as collateral. You would need to front your stocks portfolio. We will accept Bitcoin, and that is the latest stuff that's happening in the traditional finance world where Bitcoin is accepted as collateral. The difference is we will take native on-chain Bitcoin with our borrowers having a private key, and that's unique. Very few operators are doing that.
And still there are some risks as a borrower or as a lender?
If you're borrowing Bitcoin, and in this particular case, your core risk is liquidation. Right. So if you're going to borrow a lot against the collateral you've fronted, if Bitcoin price drops, then you'll get liquidated. And so my recommendation is to use a very low LTV.
How low?
Pretty low. I'd say if you're a hodler and you want to hodl through all the bear markets, I think you'd need to do an LTV of 10% or less, because Bitcoin dropped 85%, right? If you're an LTV of 50%, right, which a lot of loans are, if Bitcoin drops by roughly 50%, you're going to get liquidated. And we know Bitcoin drops by more than 50% historically. Yeah. So I wouldn't recommend using high LTVs. If you're a savvy, you have hedge fund managers that are like, I need to borrow fiat to lever out the trade. They might borrow for 1 month. That's a valid use case. They might use a very, very high LTV because they're confident in betting on the market. That's up to them. So that's a risk. If you're using other types of platforms where you're actually giving them the Bitcoins, then obviously you're up for a lot more risk. even if they're legally saying that they're not going to rehypothecate it, those coins are given to an operator. And are those operations tight? Who's holding those private keys? Can they be hacked? Can they be, maybe they're incompetent, maybe it's just one person holding the key, like usually you want to have this institution show you and demonstrate through a due diligence process that it's institutional grade, that how is the custody handled and so forth. And you want to make sure that those coins are never going to move. And they might do proof of reserves, but still, you've lost control at that point. And then there's other operators that will actually say, to give you such a good lending rate, and we will actually move those coins and rehypothecate it. You don't know what's happening with those coins, but people are using those coins either as collateral to trade the markets, to get a higher yield and so forth, and they're making up extra profit on that. The risks start to climb depending on the type of loans. In this type of lending where you have a private key, that's not going to happen. The risk is really your liquidation. What happens if we go bust, the platform goes bust, the other key holders go bust? Well, it's multi-sig, and then you could do a recovery process with the software to get your coins back. If DebiFi goes bust, then the lender, us, or the third-party custodian is still there, and we can sign it and resolve the issue. If we go bust, same thing, and the custodian goes bust, same thing, we can go DebiFi and us. So it's very fail-safe. Those risks are taken off the table. So
where do you clash with the Bitcoin macro crowd?
Name names. Who? What are they saying? Which crowd? The thing I've learned is that the mainstream media, and it seems like the Bitcoin crypto media, love to report the price went up because ABC news event. I think the daily news does not come into necessarily the price. It just happened to be in a coincidence, right? It's a coincidence. I would say maybe even 70% of the time. On that 30%, it's real. The news was Elon Musk mentioned Dogecoin and everyone jumped on and traded it, right? Or the news is FTX got hacked and the whole price crashes. There's some urgent news that does affect price, but 70% is just a coincidence. Generally, price moves in the short term tactically, which means the setup between traders, and it was going to go one way or the other, and the incentives to go one way in particular was overwhelming because a lot of people would lose money. They would get liquidated, and generally trading in the short term, it's like a football match. And you think that you're placing a bet on this game and you're sitting in the stadiums. The real traders are actually in the game and they're pushing the price around to liquidate, and it's a tactical game. Right. And so that's what's moving the price around in the short term. In the medium and longer term, medium term, it's about the investment that comes in. That's a sea of investors. Long term, it's the fundamentals of Bitcoin. Is it hard money? Will it win? What are the regulations around it? Where will it go in the next 10 years, right? And so these have impacts, but the news covers the short time frame, and it's normally 70% of the time not the reason. And so that's what I would say.
Okay. You track liquidity closely. Where are we right now? And what kind of leverage do you see in the market?
When I'm looking at liquidity, I'm looking at the flows of money, right? The flows of money coming into Bitcoin, coming out of it. Where are we right now? We're late stage in the bull market, and you can tell that because the liquidity is not keeping up with the price rise. You can see liquidity starting to weaken relative to the price going up. Okay. And so when that happens, the stability in the network becomes unstable. And so also that's when you get a lot of price rise. 2017, for example, the start of that year was when liquidity started dropping away.
Okay.
Actually. And it went from 1,000 to 20,000. Right. And at the top, there's no liquidity and the price is going haywire and it's highly volatile. And so that's where we are. Liquidity's been dropping away, and it's I think it's around 6 months into it now. So we know that we're in the late cycle of the bull market, and it's an exciting time because that's when things get really volatile. You can kind of think of it as like a ping pong ball, and liquidity is like the air that's pushing up against it. In the bottom of the market, there's just such a big air cushion, it's going to push it up. Near the top of the market, that ping pong ball's got a lot of momentum. It's flying on its own, but the air cushion's moving away. That air cushion gives it support and mutes the downside. And as that starts to fall away, this thing starts trading like a meme coin, and it's volatile. And so that's where we are right now, heading into that.
And what kind of leverage do you see right now in the market?
The leverage in the system is, it's locally climbing. You can see it builds up and then it purges, right? So if we were talking...
Why is that?
Because people get really speculative. It's a bull market, the price is running up, then they pile on and put leverage on the system. They want to take a long position, obviously. That's usually a danger sign. And so, for example, we rallied to, I believe, 125,000, and now currently we're at 109, 108. That's because so many people put in long positions when it got to the 120.
Yeah.
And when it gets extreme with everyone taking long positions, all it takes is to push the price the other direction and they get liquidated. And so what's happened is that everyone levered up, the incentive to liquidate them. Remember, it's like that football match. If you're a linebacker and you've got some, firepower, you can dump Bitcoin and push the price down and liquidate. And then the rest when they're liquidated, sell, cascades down the water book. And so that's actually in process. And then the problem is everyone's still bullish and they keep putting more long positions. That's created more incentive to push it down. So we're currently about 108,000 today. We're talking about the tactical timeframes. So the leverage in the system comes in when everyone's like getting FOMO, and then they get the shit beaten out of them, right? Until they're no longer bullish and the leverage is out of the system. That's when Bitcoin tends to be healthy to go on the next up leg. Okay. And it comes and it goes, but yeah.
Could you describe the Asian Bitcoin market and what makes it unique compared to the West?
I'd say it's size and liquidity. In the early days, really, the focus was in America and Europe, I think, whereas Asia was always quite big. The numbers that I have is that the liquidity in Asia equals US and Europe combined. And I think it's taken a while for that to be understood. And now certainly starting to see a lot of American and European companies and investors and funds go to Asia and do these conferences now because they realize just how much liquidity there is in the Asian markets.
Last cycle gave us FTX, Celsius, Luna, 3AC, BlockFi, and many more. Who do you think will end up the villain this time?
Look, the bear markets test the weakness in the system. Okay, and we saw all the weaknesses in 2022 as the thing came down. It was Luna Terra, it was the things, the people and the companies you mentioned, they were not robust. This time around, it's much more robust. At least the leverage, the virtual leverage in the system is the Bitcoin treasury companies, and now we've got the digital assets treasury companies. Some of them are quite weak in their structuring. I've only looked at a few, and the few that I've looked at look quite weak, and they can be up for liquidation. Let's call it a treasury company. It's trading at 5 times the amount, the Bitcoin that they have. You can expect that to go down to 1-to-1 or even lower. And then the price of Bitcoin is probably going to drop as well on top of that. And the bear market definitely will be. So, you multiply all those drops together and you could be like 90% down in the next. And so, but does that mean it blows up? Well, some of them could get liquidated. and then that's going to be an issue. I think that we really need to see like what blows up. I personally think strategy is like relatively robust. It won't blow up. The price will go down. I think the new DATs, they're looking at BNB, XRP, even ETH. These things, we know they drill down so deeply in a bear market. They're going to be toxic to hold. The question is, what is this bear market going to be like? And most people think, well, since we're so robust this time around, we might get a 30% bear market instead of an 85 like last time. And I don't think it's different this time around. I think that we're now the newest macro asset that's trading at scale that the world's seen in 150 years, actually. Bitcoin's this $2 trillion asset, and that is highly correlated to macro cycles. And I actually think the villain will be the global economy.
Do you think we will have like a financial crisis that is going to bring the bear market down? How real is the threat of governments nationalizing or even confiscating Bitcoin treasuries?
I think in the short term, it's not high. I think in the long term, it's very high because it's happened before. And these things play out over decades. And so if a country has got their back to the wall, they will do very extreme things. And we just have to see how long this fiat train runs and how things start to crumble around overextension, too much debt in the system, what will nation states do. So if we're talking in a 10-year time frame or a 20-year time frame, I think the risk is extremely high. Is it going to happen this year, next year? Probably not. I'm expecting a business cycle downturn, not a crisis of trust in the money. I think that we're heading into a business cycle recession, which we really haven't had since 2008. Yeah.
Your models once hinted 337K for this cycle's peak.
There's actually a top model that's published on my charts website, and that's called the top model. And the top model means that that's historically, if you follow this trend, like it hits the tops, right? Meaning the price should be under that, But if you get an exponential blow off top, then it would hit that. Fingers crossed. I've never made a price prediction for this cycle. The last cycle, I got a lot of heat for making, I don't know, what is it, 400,000, 300,000. The numbers keep changing because it was coming off that top model. And that was actually spoken about in, I think, Peter McCormack's show. And what I've come to learn is that the tops are ridiculously unstable, like we mentioned before, because liquidity drops away and it gets pretty chaotic. But if people trying to pick a top, it's kind of a fool's errand, because if you look at the system, liquidity is dropping away, the system's becoming unstable and very noisy and volatile. So if you get it, you're lucky. The bottoms are very stable, but the tops are very unstable. And so what to look for is, when does liquidity drop away? And then, the risk is high, but you don't really know the price that it's going to hit.
When did you expect this cycle to top?
If you look at the liquidity picture, it's starting to drop away, and you just got to take a guess on when that might start to really create that super, super high risk zone. And I think that the high risk zone starts in October, and then it can run all the way into first quarter of next year, even second. No one knows the future. It depends on liquidity in the system. Jerome Powell, when the rates cut, what the investors do. There's a lot of unknowns in the system. But I think that currently shaping up October onwards, the risk starts to climb.
Do you expect a wild blow off top or a steady climb with institutions cashing profits along the way?
This climb, this has been very, very steady, right? This bull market's been relatively steady, and so I think a lot of volatility will be taken out of the system because this cycle is less volatile. I think we'll get a bear market. I think we'll have increased volatility, but it won't be as wild. I don't think it'll be as wild as last time. I think we'll have a long bear market.
A long one.
Yeah, I think we'll have a long one. I don't think it'll be as wild.
Did you see any similarities between the previous bull markets and this one?
Everyone's been different. Every cycle's been different. So yeah, I would say no. The thing that's different is that it's spot driven. This market is much more spot dominated. The last bull market was derivatives had a lot of say in the price action. You can see it in the price chart if you know what you're looking for.
And when do you expect the next bear market to bottom, and at what price?
This is just guesses, right?
Yep.
The guess for me would be I'd expect 12 to 18 month bear market. I'd prepare for it. Anything can happen. Price wise, also a guess using models. I don't think it's going to drop below 40,000, but we need to see what the macro picture looks like and just how deep the macro bear market will be. This cycle, I'm very, very careful not to make predictions.
Yeah.
Because that's not my role to predict. My role is to see what's happening in the structure of the market in real time. What's happening now? How does it look? What's it suggesting for the next 4 weeks? And I think that's enough, Yeah. It's enough to get an understanding of it and to manage capital. I think trying to think 18 months out, and it's a warning, actually, if some talking head on a show is saying it's going to bottom in 18 months, the top will be 500,000. These are just guesses. You'd be a fool to listen to that person and make a financial decision 3 months out and 18 months out, because majority of these talking heads will be wrong. That's what I would say. And I think that in Bitcoin, we have a lot of new investors that might not necessarily understand just how inaccurate predictions are.
Do you expect any panic selling this cycle?
Yeah, you can break market cycles into phases, and in a bear market, you have a very highly volatile top. You get a dead cat bounce where it bounces up. That's usually when you see liquidity falling away even more, and you know it's for sure a bear market. That's probably the best time to sell, not at the top, because you don't really know. And then you're going to endure pain. The market's going to endure pain. And generally, the tail phases, you get to a halfway point in the bear market, and then the second half is when the panic starts to set in. And then you look for the capitulation event where people have endured months and months of drawdown. They're like, I've had it with this asset, and they capitulate. And usually that's a big whip down, and people are just selling. They don't care. And so yes, that's part of the cycle. So I expect it too.
It's the human psychology as well.
It's a very human thing, yes.
So when you sell at the start of the bear market, where do you park it?
I think, it's changed because I've been through the first bear market. I was accumulating Bitcoin. The second one, I was in stables. The last one, the 2022, I was in our fund of funds, which was yielding on USD. Mm-hmm. I think this one, moving forward, I'll be doing Bitcoin collateralized lending. I'll lend US dollars for some yield backed by Bitcoin. Yeah, that's relatively robust.
What are your thoughts on Tether Gold?
I think Tether Gold is dog food. Let me explain that. Yeah. They're dog fooding their own product, as we say in startup terms. That's a good thing, not a bad thing, right? Because you can see Tether's treasury is holding gold, right? So they've built a product for themselves to hold their gold. They're tokenizing their gold, and they've offered that to others that want to do it. That's how I think about it.
So do you trust stable coins not to be frozen or confiscated in a major financial or government crisis?
I wouldn't put in my bank cash any significant amount because of that bail-in threshold. In terms of Tether or Circle, or, there's what changes every day, but I think it's around 170 billion US dollars in that pool of capital. Is the US government coming in to freeze that? They might take the money out of your bank account, but to take $170 billion from Tether or Circle, who's going to buy their T-bills if they do that, right? The US government requires buyers of their debt. And the fastest growing buyer of debt is Tether right now. In fact, if Bitcoin price goes over the next 10 years to $1 million, the T-bill buying, the short-dated T-bill buying is more than enough to replace China, who have stopped buying the T-bills. So the US government debt is reliant on stable coins growing. So I don't think they're going to freeze that, because that's kind of committing suicide on their debt. They could do it, but that would be an absolute crisis, a fall of a nation state. That could happen.
Yeah.
But, that, if that happens, it's the nation state's going down.
Yeah.
That could happen.
Let me play you a clip from my interview with Adam Back. Does the halving affect Bitcoin's price?
Empirically, it seems to. And the reason why that might be the case is that the amount of new coins available shrinks. Now, I think some people are sort of surprised that the halving continues to have a large economic effect, because the percentage reduction in supply compared to the total is becoming smaller over time, right? Because, if you're at 19 million and the number of new coins drops by only a percent per year or something quite small, right? Then they would say, well, why would a percent make a big movement? They guess it would be a diminishing return. But I think actually the reason that is not the case is that there's another effect, which is the behavior in the market of the investors. So I think effectively newcomers become more convinced over time, and then they start to save and hold for the longer term. And so while the percentage change arising from a new halving is diminishing each halving, the number of coins that are being cold stored is increasing over time. It continues to have, so far, a big economic effect each halving, because you're looking at the reduction, the change in supply versus the amount of coins available for trade. And as long as that ratio is constant or even increasing, then it can still have a large economic effect.
What's your take? Do you think the halving still matter for price?
It does at the moment. I like what Adam says, because it's a unique view, right? He's saying that the ripples, the supply shock, and the ripples in the pond are getting smaller and smaller. And he's saying the depth of the pond is getting thinner and thinner, so those waves are still having the impact. The depth being the actual supply that's being traded. Now, there was a touch point where he says more and more is locked away in cold storage, more hodlers and so forth, and that might be the case. I haven't done the study on it, because it gets pretty tricky. But we need to see if that is really truly the case. What I do know is Bitcoin is becoming very, very liquid. It is incredibly liquid for its size. That means there's a lot of trading activity going on. It's true that we're getting more coins into cold storage. That's because it's being locked away into the Bitcoin ETF and MicroStrategy, for example. That's in cold storage, but they are being traded, right? Yeah. They are being traded as in the shares of the ownership is being traded. That does have an impact. And so I'm on the other side of the camp. I think that the halvening is getting smaller and smaller. And I think the depth of the pond is actually staying the same or getting deeper. I think the liquidity is getting deeper. And so I think it has less impact in the future. But we're all speculating right now, because to date, it does have an impact. We're talking about the next cycles ahead.
So what signs will tell you the 4-year cycle is breaking down?
I would say that the free market stopped working.
How?
Maybe we would say free markets stop working, central banks stop working. Because the 4-year cycle is a superposition of two impacts. One is the halvening and the other one is the global liquidity cycle of money printing. And it just turns out that money printing, the surges of liquidity, when nation states print more money, central banks print more money, it is a 4-year cycle.
So they go hand in hand.
Hand in hand, liquidity cycle of the amount of fiat being debased, the rate at which it's being debased is oscillating 4 years. And they superimpose onto the halvening cycle. And so when the halvening goes to insignificance, will the resonant frequency of the debasement move from 4 years to something else? And if that's the case, then we'll move to something else. You know, we'll be correlated more to macro markets than internal supply shock within the Bitcoin pool of capital.
How would a super cycle look like?
If we get like a macro bull market for more than 4 years, you know, like I guess that's possible. But yeah, I mean, it's also how you define it. We might say it's a super cycle because they only drew down 40% and, you know, a bear market should be 80% or something like that. But yeah, for me, a super cycle it's all about macro markets now.
For me, super cycle is when it always goes up, steady, but climbing up. We wouldn't have bear markets. That's how I understand it.
Yeah, I think that's a figment of people's imagination.
All right.
I think, yeah. When have you seen a market that only goes up? I mean, I'd be very scared if that was the case.
Yeah.
Something's wrong.
Do you see any signs this bull market could stretch into 2026? I know you already mentioned the beginning of Q1 26, but do you see any signs?
I mean, if, you know, like Jackson Hole, that just happened, they've just thrown out the use of, you know, inflation metrics. Mm-hmm. And that means that the Fed's allowed to print however they see fit on other metrics. And currently it was inflation that was holding them back from printing money. And so, sure, like if we get cuts in rates, which means more money printing, liquidity can come into the system. And how does that interact with the economy is the big question. Because everyone's thinking that a whole lot of liquidity injection, a lot of money in the system, all markets go up. But you'll see that often they print as the whole market's caving to soften the crash. Mm-hmm. And so it's not always that liquidity pumps market. It's actually there to stop it from hard crashing. Right now, I think the market's looking pretty fragile, and they should have been printing money much earlier to stave off the recession. Because this happened in COVID, actually. The business cycle had hit those warning signs, and the Fed was printing early, way before COVID actually hit. And then when it hit, they printed like crazy, and you saw how it just bounced up, right? And so a lot of it comes down to the timing of when does the liquidity come in. And so far, all of this year, it's been late. You see Trump been pushing for lowering of rates, and Powell has been holding off. And now it looks like they will print. The question is the business cycle going to come down hard against that liquidity, or is it going to hold up and it's going to rise? You know, so let's see. You know.
Yeah. What's the difference when ETFs and company treasuries lead the market instead of retail?
The theoretical answer is that it's more steady, right? Because institutions like MicroStrategy aren't going to sell their Bitcoin. ETFs tend to be more traditional wealth people that are more steady, let's say, in their investments decisions. So we would expect less like downward volatility. The question is, how real is that? Because we don't know the investors. I just know a lot of Bitcoiners are buying MicroStrategy and buying ETFs as well. And so is it the same investors just going through an institutional wrapper? That's my question. I think a lot of Bitcoiners are actually using the security instruments this cycle around, particularly around the treasury companies. You can see it all over Twitter, the amount of interest around MetaPlanet. Originally it was MicroStrategy. Now all of these treasury companies, everyone's interested in it. And I think that we haven't had much of an alt season because that was the thing that was exciting. And now it's securities wrapped around Bitcoin.
Do you think we are already in the thrill and euphoria phase?
No, I don't think so. It's pretty boring, this cycle, actually. Yeah.
What's the trap you see everyone walking into right now without realizing it?
I think in general, there's a lot of talk about the money spigot's going to open and the market's going to run higher and higher. And I think in bull markets, we're too bullish. Yeah, I think that's the main trap right now. We've had talks of the Samson Mao God candle. We've got talks of Bitcoin going to the moon, like 200,000, 400,000, I don't know what. And I think Bitcoin's we're not in 2016 anymore. We're not in, not 2016, Bitcoin was below $1,000. Today, Bitcoin is, for every one Bitcoin you buy, that needs an investor that fronts $110,000 to buy it off you. 2016, it was $500.
Yeah.
So we're in a era where we need to gobble up trillions of dollars to move price. When people are bullish, they're thinking price targets of $1 million are 10x from there. Back in 2017, it was 100x in 1 year. But forget about these 100x's. We're a macro asset now. In that world, 20% gain is a lot. So I think that people are too bullish. I think we need to think about things as investors, long-term investors. It's a great investment long-term, but these 100x's or the 10x's.
Is the hodl hype real conviction, or is just influencers dumping their exit liquidity on retail?
Yeah, I think that's too conspiracist. I think everyone believes it. And I think also there's a feedback loop within particularly Twitter where when you're bullish, everyone likes it.
Yeah.
And so that encourages the influencer to post more bullish stuff. There's this kind of dichotomy. The mainstream press are constantly negative about Bitcoin until recently, but it's generally overly bearish, and everything on Bitcoin Twitter is overly bullish. Yeah. And then there's a feedback loop, and it's like, I saw one going, Bitcoin's going to hit $2 million or something, and I think Henrik Zeberg was like, why don't we just call it around, X number? I think it was getting quite close to 5.2 million, which is the number I figured would be like world GDP. There's limits. 5 million Bitcoin price this cycle means that it's more than world GDP. And so these, we're hitting ceilings. So it's just this feedback loop within this little microcosm called X.
Yeah. So in part one, you said that during the 2008 crisis, the dollar was the safest asset. What's the safest asset today?
That in a flight to safety, like the dollar is the thing that's not going to drop. That's
still
what
today.
I said. I didn't say that was necessarily safe. Maybe in a flight to safety, it's safe. Mm-hmm. I don't think it's changed. The flight to safety, I think, happened over 4 to 6 weeks, right, as the whole system deleveraged. So if we're in a crisis like that, the safest place has been the US dollar because that's the world reserve currency. It depends on the crisis. I quite like the Swiss franc if that was the yen. These are like safe haven fiat currencies. As we know, fiat is not a safe place to put things long term, but we're talking about an unwinding of leverage, and those are the places to put it.
How do you expect Bitcoin to behave when the next big financial crisis hits?
it'll go down. Like everything. When not crises hit, everything goes down, and then they shake out, and then some assets will outperform. The last one was gold, right? Because there was very little trust in the banking system because it was shook. The banking system is basically the creation of our money. And so gold has always been the place to go to. Bitcoin would do very well in that type of situation as well.
Do you think the Swiss franc will remain stable through the crisis, through this next one?
I think it'll be strong. Historically, it's one that's strong.
It's stronger than the dollar.
Remember, when we're talking about this is like over a period of weeks in a shock system. We're not talking about a bear market. A bear market, even then, is assuming the system staying up. It's very hard for a bear market to see things climb against US dollars. Commodities might.
What's Bitcoin's biggest risk?
Centralization of the supply. I think most of the other risks we can work around. Quantum computing, all these type of things. The code base we can fix. Even if it forks, we can bring it back on track. It's happened before. It's been pretty battle tested. The centralization of the supply is the highest risk because that opens up nationalization of the supply.
And how do you sort that one out?
Self-custody, yeah. Self-custody needs to be prevalent. These Bitcoin treasury companies, they are a risk to the system. Imagine if 50% of the supply goes and gets wrapped up in these companies, they can be completely nationalized. And we've done that before. We've seen that being done before, and that's how we got to fiat. We had gold as money for 6,000 years, and it was medium of exchange and store of value, everything. And then in the 19th century, we started making the gold redeemable for paper notes. So now the store of value is sitting in a vault held by a bank. By the 20th century, it was all sitting in Fort Knox, and everyone's trading US dollars around it. And then what happened? The redeemability got snipped, and now we have fiat, and the whole world got rugged into fiat through this kind of it took a couple hundred years to do it. Now, the same thing can happen to Bitcoin if it doesn't get used as a medium of exchange, if people aren't self-custodying. We're all just happy with our MicroStrategy shares and our ETF shares. Store of value is sitting in these vaults, these cold storage vaults that are owned by the company who have the private keys, and that can totally be nationalized, and the same history repeats. And that's a huge risk to the system because we've taken 16 years to get to this point, and it's been the hard work of so many people and communities and everything that's gone into the Bitcoin. And if it gets rugged now or 10 years from now, in our little experiment called Bitcoin that reached multiple trillions, just got turned into a gold story where it got rugged into fiat again. That's the risk.
What do you think is more probable, that the US government will nationalize, for example, Coinbase, the custodian of most of the ETFs, or the Bitcoin miners in Texas?
I think Marathon Digital is the only one that's really holding a lot of Bitcoins. That they may be mining, and that's effectively providing security in the network. But you can nationalize those companies, sure. But the mining network is worldwide and global. Mm-hmm. And so miners will move elsewhere and spin up new mining capacity. They'll go to where the cheapest power is. It's who holds those Bitcoins that have been mined is the issue. Marathon Digital holds the most out of the miners.
Riot doesn't hold it?
Yeah, they hold a little bit. Marathon by far holds the biggest chunk of it. Mm-hmm. But that's nothing compared to the amount that strategy holds and the ETF holds, right? And so what's the point of nationalizing the miners that are providing security onto the network when that can be spun up anywhere? That's quite decentralized in a way.
So the supply is the risk.
It's a supply is the risk.
What could outperform Bitcoin, and what are you betting on?
I tell you, a lot of things will outperform Bitcoin. Okay. Very, very few. I don't know of anything that can outperform Bitcoin adjusted for the risk you're taking, The return's relatively easy to understand. The risk you're taking is usually very hard in other investments. Bitcoin's risks are very, very low if you're self-custodying, if you're willing to handle the volatility, particularly bear markets. For myself, I'm more inclined to invest in Bitcoin infrastructure, startup ventures, because they will outperform Bitcoin if they're successful. If they're not, you can lose everything, right? So it's higher up the risk curve and higher returns. I think it's a worthy thing to do to invest in the infrastructure. And I think it's lower risk than other startup ventures because you've got the tailwinds of Bitcoin growing from 2 trillion to potentially 200 trillion in the next 10, 20 years. So that's a huge tailwind. These companies, if they get any kind of size beyond the early phases, they should have a Bitcoin treasury. So that's going to grow as well. So there's a lot of de-risking in these types of investments if you can handle, how to navigate them. Yeah.
A few quick ones before we wrap up. What's your strongest conviction for the rest of 2025?
That a bear market's going to hit.
It's going to hit in 2025.
It's going to hit soon. If it doesn't hit in 2025, you should be getting ready for it. That's my opinion. But don't trust me. Do your own research, right?
So what's one thing you are still not sure about?
I'm not sure about the centralization risk. I'm not sure how this is all going to play out, whether or not Bitcoin will actually work because of the centralization powers at play right now.
Give me your Bitcoin price call for December 25 and for the midterms in November 26.
Didn't I say I don't do predictions anymore?
Yeah, but I'm just testing, just trying. Maybe you forgot, It was like 20 minutes ago when you said
I could be, I'm pretty sure it's not going to go negative like Peter Zehan says. So how's that for a prediction?
That's it?
Yeah.
So for December 2025, they don't give us anything.
It depends if we've topped or not, right? And
Yeah.
I think it's like we're playing chicken with a freight train, when we're looking at how close to the top we get.
Yeah.
Yeah, we know that the top's coming.
And what's a lesson you learned the hard way that you wouldn't trade for anything?
Can you narrow it down?
No,
Too
I
broad.
was hoping you could. There must be a lesson there. Or a few.
The lessons to learn are really the most important are the ones on how to manage yourself, how to manage your mind, how to manage your emotions, how to know yourself, I think. Those are the lessons. I think the lifelong lessons, and you never get there, but know yourself.
Why is it so difficult to know yourself?
Because I believe we're infinite. It just keeps going.
Yeah. Thank you for your time in this generous conversation, Willy. Where can people follow you and your work?
The easiest way is to get on X and look for my handle, Woonomic. My profile links to the other stuff.
Can't wait to have you back. Until then, stay sovereign.
Thanks, CK.